Welcome, ladies and gentlemen. Yes, it's Friday. Firstly, I want to apologize for yesterday's absence. Bitcoin decides to do nothing. And then, of course, in the Asian session takes a rollover. But what are we heading into, guys? Well, we had some interesting data yesterday with the unemployment claims coming in lower, solidifying the idea that the Federal Reserve is going to keep the interest rates on hold. Hawkish sentiment, but I do believe that investors are now having to position themselves into other asset classes, but they're not going to go out just yet. I mean, FOMC is next week in 5 days' time. So it's going to be a very interesting story, to say the least. In today's video, I'm going to break it all down on where we are right now with everything across the board, cryptocurrency, Forex, the stock market, you name it. So if this is something that is going to appeal to you and you are a player of the market, make sure you watch to the end of the video as we got some flavor for you today. Let's get with the program, ladies and gents. So we get it all started off with the headlines that are coming into play. It says that the stock rally fizzles as European profits disappoint, and that's coming from car manufacturers in the Eurozone. One thing you've got to take into consideration is the Eurozone itself in terms of interest rates. Given that it's at 2.14%, they are planning on cutting the rates again, but that's just going to naturally deplete the value of the euro. So naturally, investors are going to want to seek investment elsewhere, like the dollar. Now, the issue that we've got right now, ladies and gentlemen, is investors are looking for another opportunity to take advantage of what looks like a very sustainable bull market that's happening with regards to the stock market. Going over into some data regarding that, you can see here on the Investors Business Daily website, it says here that there's only 3 distribution days on the NASDAQ, 2 on the S&P, but the leaders up in volume are the tech heavyweights. You've got Google, you've also got NASDAQ itself, and you've got Oklo, Deutsche Bank, Bloom Energy. And when you look at this data right here, it gives you a feel for where money is actually going. Now, of course, Google has done very, very well in terms of its earnings, absolutely smashed it, made a nice little gap ups, come back down. Investors are now going to be priming into buying a little bit more Google because of their great earnings results. But this is what's fueling the move to the upside for the NASDAQ overall. It's because of AI. It's because of tech. Going into the volume, you can see NASDAQ is performing so well with its volume above average, and it has succeeded at going over from the previous sessions. So when you see the stock market making highs, all-time highs, and volume is there to back it, it does demonstrate that institutional investors are stepping in and accumulating stock. Now, there's a lot of back and forth with regards to the Eurozone and the US trade deal story. This is a little bit of a problem. It says here that the EU fails to reduce 50% steel tariff outlined in the trade deal with the US. This is a bit of a problem because you've got to understand that the Eurozone itself is the only currency that makes up around 57% of the dollar dominance. So the dollar dominance is a basket of assets that are traded against the US dollar, and the euro is the biggest one. This is why it's so important that we do find out where we are with the trade deal with regards to euro. I mean, if you saw what happened to copper last time when Trump put out that levy, that tax levy or tariff levy, you see it actually made a wonderful move to the upside. However, this is going to squeeze copper suppliers as well, because they're going to have to mark up their prices, and that's going to naturally hurt economies, whether it's in the Eurozone, and equally it's going to be hurting the US. I mean, the US gets the benefit of having a tariff on copper, but it's then going to potentially slow things down. And that's a problem when you're looking at construction companies and all these guys that are trying to get contracts out there to start developing. So that's one thing you could look into. If the impact of copper's price is going to keep on going up, that is naturally going to be suppressing construction companies. So if you are savvy to that kind of thing, go and check out some construction companies that may be slowing down on construction because of the inconsistencies of where we are with the tariff story. Once the tariff story comes into play with the Eurozone, that's going to then allow us to position ourselves into whether or not we want to play Euro, or we then do what the majority of people are doing right now, is going into dollars. Go and have a look at the dollar dominance. You can see it's starting to come back up, and I'm saying it again, don't sleep on the dollar. But there is a little bit of a transition. Going into this article here, it says that investors should start to consider taking hedges. It says here, markets now see a greater chance that the Fed chair will maintain a hawkish tone. Equally, it goes into it and says that trading desk firms, including Goldman Sachs, are telling clients to buy cheap hedges against potential losses in US stocks, as there are a number of risks that are starting to come into play. Well, let's just have a look at what's going on. Check this out. Over the last 30 days in terms of ETFs, and I'm going to get to why ETFs are somewhat well, according to Robert Kawasaki, there's a bit of a story with that, but I'll get to that in a second. The average 30-day returns in terms of ETFs, we don't see no Bitcoin ETF, nothing. Going into it, you've got RKLB, Rocket Labs. Now, Rocket Labs are doing some wonderful things, ladies and gentlemen. Check this out. They are up nearly 800%, ladies and gentlemen. And what do? It's a company that makes rockets. What's going on? Like, how come these guys are doing so great? But looking at the ETF, you can see it's doing very, very well. 66 million in assets under management. And you can see there's a lot of interest going into that. Equally, you've got a couple of cryptocurrency guys in there. You've got Riot Platforms, okay? You've also got, go further down, we're seeing Solana ETF. We're now seeing iShares Ethereum Trust ETF coming into play. Could it actually mean that altcoin season is here? Well, let's just back that logic up. Over here it says, Crypto Rover says, altcoin season will make a huge comeback by the dip. Okay, then. But look, BlackRock, Ethereum ETF surpasses $10 billion in assets. But check this out. Robert Kawasaki comes out and says that if you're buying an ETF, you're pretty much buying paper. He says, for the average investor, I recommend gold, silver, and Bitcoin. Yet having an ETF is like having a picture of a gun for personal defense. He's got a point. If it's not your keys, it's not your coin kind of thing. But you've got to understand, the institutional investor doesn't have access to cryptocurrency the way the retailer does. I mean, if you go over to the Arkham, you can see that we've got ourselves 731,000 in the Bitcoin ETF. We're going very close towards $100 billion in assets under management for BlackRock. And going into it, you can see we've got a little bit of movement inside of the ETF. But then we go and cross-reference that with price action. You can see that Bitcoin is currently stabilizing. I mean, it's holding out very well within this range, and it's grabbed a lot of interest in terms of investors in this range. Why? Check this out. Going over into the order flow, you can see, this is for Solana, but we go over to Bitcoin, you can see that we had some very big orders last night. And this is what I'm paying attention to. When you get quite a significant amount of orders coming in, like, look at this. These are all bids. These are people buying, ladies and gentlemen. It's not selling. The people that are selling are the ones that are weak, the ones that are getting squashed out, using too much leverage, or they're just concerned emotionally about Bitcoin's price, and they feel like they're getting scared. This is where they're going. They're selling into these guys that are buying. Look, 30 million at 117,344. Going over into the lower points, you've got 4 million at 114,733. And then we found one this morning right here. Where was it? Oh, you had 18 million right there. If you see it, 4.6 million, 18 million right there when the initial order was for 1.03 million. Then we had this big order right here. Let me find it for you. It showed an order of 50 million. Whoa, let's just go back into that. There you go. It's actually not 50 million. That's another order at 114,300. 90 million. 90 million. There are people watching Bitcoin's price. They are transacting inside this zone. Now, if it is the case that we're going into altcoin season, Bitcoin is going to do this. Exactly that, but even longer. It's going to go up, it's going to go down, it's going to go up. This is what you're going to get with Bitcoin until we get to the point where we know where we are with the Fed. In my honest opinion, the Fed pivots. That should be the point when Bitcoin starts to break higher because people will appreciate that. They're cutting the interest rates. Now we need to see a change in the way people are investing in terms of assets. And then naturally, Bitcoin would have already had all that interest come into it. And it would be deemed as the hedge against inflation. Because if inflation does not come down in the next reading coming into August, ladies and gentlemen, Bitcoin is the hedge. Speaking of hedges, you might be familiar with gold, silver, yen, euro. Those are usually the safe haven assets. Check this out. iShares Interest Rate Hedge Corporate Bond ETF. That's the blue line. The yellow line is the S&P 500 on the CME. And then you've got iShares Interest Rate Hedge Corporate Bond Volume. Look at this. This asset, or ETF, is designed to protect investors in changes with regards to interest rate expectations. Now, what we're seeing is this is starting to come up. Equally, the stock market is flying to the upside. But this is starting to move up, which is starting to tell me that investors are sort of somewhat concerned about where we are with interest rates, going into the fact that we already know that the Fed is also going to be hawkish in its next approach to the FOMC. When the data is consistent showing that the US economy is fine, that means that this chart over here is, this chart over here is effectively giving us the idea that investors are going to be going into dollar denominated asset classes. That's why I'm saying don't sleep on the dollar just yet. You can go into risk on assets, but think about it. Against the euro, I mean, it's going to be a bit of a problem because you've got changes in interest rates, you've got tariffs, it's going to hurt their economy. And the fact that they want to cut their rates even more means that there's going to be less value being locked into the euro, okay? So with that being said, you can appreciate that investors are right now trying to seek hedging into US corporate bonds. Look at the bonds market. They are trading significantly lower, but the changes in interest rate expectations are coming into play. Yields are up 2-year, 5-year, 10-year. They're all moving up because investors' expectations of the future mean that interest rates are going to be higher for longer, which explains why we're seeing this blue line representing that corporate America or investors are turning into hedging ETFs that are filled with corporate bonds in US. That's very important to understand. Look at the volume. It's starting to come into play in this year, ladies and gents. They could be getting themselves ready for something. They could be getting ready for interest rates higher for longer. Don't sleep on the dollar. Speaking of sleeping, don't sleep on the discount code that we've got for the Platinum membership. It expires at the end of this month, where you get 20% off the Platinum membership. And alongside that, you get access to trade setups every single day that I provide for everyone across 6 asset classes: Bitcoin, Ethereum, Solana, NASDAQ, gold, and of course the euro. But inside of each setup, you get a breakdown and a video which helps you understand my narrative of what I expect to happen throughout the day. Use the discount code ALLTIMEHIGH, which is in the description of this video, and that expires at the end of this month. And you get 20% off your first month when you become a Platinum member. Quickly jumping over into cryptocurrency in terms of price action, you can see that Bitcoin's now breaking away from the 5 and 13 EMA. Now, if you want a little bit more information on these moving averages and the whole system overall, just get to tradersreality.com. Everything that you need is on the homepage, from installing the indicator to understanding how to use it. And there's a PDF right there for you, so you can take advantage of that. Download it. It's free of charge. And it breaks everything down with a couple of trades that I've taken based on using the hybrid system. So go check that out if you want to learn more about the hybrid system. Now, price is trading below the 5 and 13 EMA, but it is a violet vector candle. Now, this is what you're looking for. You're looking for the idea that if you're going to start dollar cost averaging and Bitcoin is going to swoon to the upside, then you got to wait for the dips. And that means price is rising, you wait for the dip. The dip comes in, price then continues. Dip comes in, price then continues. The ideal scenario for the dollar cost average trader, on the assumption that he does take profits, is that when he's buying here, he's effectively selling here. So that when he's selling at that point, he's now in a position to buy more here, and then he doesn't really need Bitcoin to make that much of a big move to make an even bigger return, because he's using more capital and holding it for less periods of time. That makes sense as to why you're seeing on the bids and the offers, why they buy at these small areas right here. You got 7 million right there, and then price comes all the way back up again, and you end up seeing the same order being transacted on, okay? So look at that. You can see, like, you got 16 million that transacted right there. But what you're looking at with Bitcoin is this. Can you see here? You got all this ordering like here, 41 million being bought at that point, and that at these lows right here between the 117,600. And then as price is going up, you can see, look, 73 million, 41 million, 16 million, 41 again, 113 million, all being sold. And the initial order right there was for 36 million, but 113 million got transacted. What's that telling you? It's telling you that they're using a lot more money on buying the dips, and they're selling it so that they can then get back in on the dips and sell it again. And look, you don't need it to move that much. So that, in my opinion, is the best way to approach dollar cost averaging. Because if you do allow Bitcoin to drop to one point and then it goes up and then it comes down, it could come down even more and forcing you to get in again, thinking that you're going to get it at a discount, buy at this point, but then it comes down even further. You can't project how long the dip's going to last for. But it's on the premise that given everything that's happening in cryptocurrency, everything looks like it's progressively marking up. And that the fact that you've got such mad institutional investment coming into crypto, logic does say that it's naturally going to keep on climbing higher and higher. But can you absorb the drawdowns when they do retrace, or what we like to call buying the dip? One thing to take into consideration is how the stock market is performing. Okay, we know that the marketplace itself has got high volume coming into play as they do keep coming and making all-time highs. Naturally, that does fuel sentiment across the board. So if you are going to be exploiting cryptocurrency, because we have seen that Bitcoin has been stuck inside of a range, it's not really been moving up, but the Nasdaq has slowly been moving up. Investors are starting to try and work out where can they start putting their assets. So they are hedging themselves, even with gold and of course silver. Look, silver's just making a wonderful move up, but gold is going sideways because they don't know whether we're going to get the interest rate cuts or not. So that's something you've got to pay attention to. And if, in my opinion, given that we don't know where we are with interest rates, it is strongly recommended that you're focusing on the euro, focus on gold, and focus on the Japanese yen. Okay, now the reason being is because they are deemed as safe havens. So logic says that if the euro and gold and the yen are marking up, but you don't see cryptocurrency moving up, it tells you that investors are going into safe havens. Now, if you want to trade on a platform that gives you the ability to take advantage of the euro, gold, silver, and Nasdaq when crypto isn't moving too much, get onto BTCC because they do have the tokenized stocks and commodities. So you can trade gold, silver, Nasdaq is Tech 100, and quite frankly, Nasdaq always moves so much more faster than what Bitcoin can do. And that is a fact. So if you're stuck in consolidation with Bitcoin and you're in a spot position or in a leverage position, you can exploit it when you are trading on BTCC. So Tech 100 is for Nasdaq. And then of course you can trade Apple stock. We've had some new stocks put in today. You've had BlackRock as well. Of course, my internet is absolutely slow, but that is a platform that you can hedge yourself by trading crypto, Forex, and tokenized stocks and commodities. And if you join via the Traders Reality link, you get yourself a 10% bonus. And it's great for anyone who doesn't want to use VPN or KYC. And your bonus tends to get paid every Tuesday or Wednesday, depending on when you take part in that bonus. So if you made it this far, mad love and respect. Hit the like button and subscribe on the way out. But just remember, it is Friday and the legacy markets will be closing later on today. So you won't have anything to trade into when we go into an Asian session this evening. But of course, cryptocurrency is still going to be moving. So I do believe we're going to see some good fun today in the marketplace. Just make sure you pay yourselves, take some money off the table, enjoy the fruits of your labor because this game is so... Anyways, I'm not going to get into it. Mad love and respect. Peace.